NASDAQ down 2.3% as you got a confluence of stories, a bit of a perfect storm, blow-ups like Docu and Didi, some hawkish Fed speak today, and more curve flattening. You got the 10-year below 1.4 now for the first time since September, John.
Yeah, again, given that action in the NASDAQ, not a lot of tech names in the green, but here's one, shares of Marvell surging today. You can see it there, up 16%, the stock hitting an all-time high intraday after the company topped estimates for the third quarter. Revenue growing 61%. Analysts jumping on the positive results with a bunch of price target bumps and upgrades. Cowen taking the stock to buy, calling it, quote, a watershed moment for a silicon powerhouse. And Bank of America upping its price target to 115, saying Marvell is the next $100 billion cloud 5G enterprise semi-leader. Joining us now, Marvell Technology CEO Matt Murphy. Matt, good morning. And you've been sharing with us your thesis. I think the viewers who have been paying attention aren't completely shocked by this, but it is Cloud Week. And even though you're a chip company, cloud is at the core of what you've got going here. So please start there for those who might just now be paying attention. Why is cloud, why are the hyperscalers such an important part of what's reflected here?
Sure, great. Good morning, John. It's great to see you and Carl and Julia. Yeah, we had a tremendous performance in the quarter, largely driven by our data center business, which, as you point out, was very strong. It basically doubled year over year, and we guided it to be up in the fourth quarter double digits. So the cloud business continues to be very strong for the company, and I think that's largely driven by, and you can see it in published reports in the news, but tremendous CapEx expenditures coming as these large hyperscale companies expand their applications, their services, and even futuristic types of things like the metaverse are going to require tremendous amounts of capital spending on data centers, and that's really good for Marvell as one, we're a key player there, and it's also the largest single part of our business. It's over 40% of our revenues is in data center.
And moving data around, large amounts of data at high speeds requires new technology. That's some of what your chips are really responsible for. There's an autoplay here too, right? We talk a lot about the edge of the network, the intelligent edge, perhaps. So as that continues to play out, AI in cars, self-driving in cars, what's the impact for Marvell?
Yeah, I think the long-term opportunity for Marvell in automotive is enormous. If you think about the next 10 years, the biggest growth driver in semiconductor demand inside automotive is going to be for the data-centric type of semiconductors, the data-centric IP to move the data inside the car, to process the data, to secure the data, and to even store the data. And those technology pillars are really Marvell's strengths, whether that's chips that we have today for cloud computing, for 5G, even for the enterprise. We've taken those very complex, very high-performance data-centric technologies, and now we're applying them to automotive. And we see a groundswell of opportunity here, John, first with our connectivity products, where we are one of the leading companies in the in-car networking chips. We said that business was actually on a $140 million run rate, up from prior guidance of about $100 million, and that's growing it's doubling every year. But we also see new opportunities in compute, storage, and other applications for the cars of the future.
I want to hear more about some of those opportunities, especially in areas around 5G and even the metaverse. But first, I think it's important to talk about supply constraints. I know you factored supply constraints into your very bullish growth outlooks, but I'm wondering where you see supply constraints impacting you down the line.
Sure. Yeah, Julia, we were very pleased to deliver the kind of revenue growth that we saw. And also the guidance was obviously very strong for the fourth quarter. And we also gave an indication for next year of the company's ability to grow its revenues by about 30%. That being said, we also mentioned that we were still not able to make a real meaningful dent in the unfulfilled backlog or the delinquent backlog. So while we're growing the company in revenue and we're really barely keeping up with demand, as we look out into next year, there still are constraints that are in the system. particularly on the more advanced and cutting edge types of technologies, in particular in packaging technology, complex substrates. And then there's also some different constraints as you get into the wafer fabrication side. Interestingly enough, on some of the older legacy nodes, where there's just been a tremendous amount of demand across the industry for applications like automotive, like IoT, like industrial. And so the supply chain partners we have are obviously working through that situation, and they're investing heavily in CapEx. But in the meantime, it's very tactical in terms of our need to really figure out where the demand is, how do we allocate the supply properly to that demand, and keep up with growth. But it's a first-class problem, and we're just heads down focused on supporting our customers through this.
And tell us a little bit about the 5G demand. I'm curious if the fact that AT&T and Verizon have had to delay their 5G rollout because of those FAA airline concerns, if that is having any impact, or if you see additional demand coming around the metaverse around 5G.
Sure, Julia. So the global 5G rollout continues to be very strong. It started a few years ago with Korea. It moved to China, and now it's in full force in the United States, in Europe. India will be big next year. Just to give an indication, we guided our 5G business at Marvell up in the fourth quarter 30% sequentially. So we see strong deployments of 5G. In the U.S., I think the view is the carriers are still deploying. They're working on the issues, obviously, with the FAA. We don't see any impact to our business. And remember as well for the Marvell side, we had very little share in 4G. So a lot of our growth, candidly, is not only driven by the deployments of 5G, but the gain in market share and content that we have really in all the major players. So that's exciting. We expect that to continue, not just in the fourth quarter and into next year. With respect to the metaverse, I think what's interesting when you start looking at whether it's the metaverse or NVIDIA talks about the omniverse or really any of these virtual environments, the infrastructure that's going to be required to support that is going to be tremendous, meaning you're going to have really a significant increase in the amount of computing capability, network bandwidth, but also latency, which means how fast you can experience the virtual world in the metaverse. And 5G, one of the big benefits that it brought was a dramatic improvement in latency. So it almost gives you wirelessly real world feel. And we think that could be one of the killer apps as you think about 5G in the future, is really moving to virtualized environments. It's going to be actually a necessity in the wireless world.
That's incredible. I wonder, Matt, how you're thinking about that kind of secular growth versus cyclical growth, and what you say to those who are arguing that there will be not just inventory normalization in calendar 22, but an inventory overload.
Sure. Well, Carl, I've been in the semiconductor industry since 1994. I've seen all kinds of these up cycles and the down cycles and the aftermath. And fundamentally, there is still cyclicality in the semiconductor market. The interesting thing about Marvell, and we gave color on this yesterday, was that despite some of the concerns industry-wide, our business looks to be incredibly strong because of the secular trends. We see our business growing about 30% next year. Actually, we did an acquisition of a company called Innovium recently that'll add about $150 million of incremental revenue on top of that growth. And the reason, Carl, is that our biggest growth drivers are, as we talked about earlier, it's the cloud, it's 5G, and it's automotive. And those businesses are growing in excess of 40% a year, that basket for Marvell annually. And that's actually going to accelerate even beyond that next year. So we have our own unique growth drivers, which are going to continue, not even next year, but we even have a step up. Really, we see the year after and beyond. So I think there's some unique things going at Marvell. It didn't just happen overnight. We've been at this for 5 years.
Matt?
And I just want to thank the team we've got at Marvell for what we've been able to accomplish. It's nothing short of fantastic.
Yeah, it's quite a journey that you've started and continue to be on. Before we let you go, I got to touch on something we've touched on before, but that's customization, because there are a lot of people who might think existing chip makers who have their own IP that are dealing with hyperscalers, large companies, that they're under pressure because these companies want their own designs in some cases. They want customization. But I want to make sure that the viewers understand your answer and explanation to how Marvell plays into that customization environment.
Yeah, thanks for asking that, John. Customization is a critical aspect, actually, of all of these high-volume markets that we talked about. The hyperscale is certainly one. This is where Marvell excels. When you see any of these companies announcing that they've hired a new silicon team or they're developing their own chip, there's a strong possibility that Marvell is involved behind the scenes with those companies. So think of us as a critical design enabler and design partner. We have tremendously important and unique IP across networking, across high-performance computing, interconnect, security. And so what we do really is we partner with our customers in 5G, in automotive, and in the cloud to really enable them to make the chip that they want for their specific application. And so typically that's done in a partnership model where their silicon team contributes their special thing that they need for their application, whether it's to accelerate computing or to do some specialized kind of processing, let's say in 5G. But behind the scenes, it's Marvell that's really helping to stitch the entire chip together, providing the fundamental IP, providing the manufacturing support, the yields. And we're happy to do that, to be behind the scenes and let our customers put their own logo on their chip.
Yeah.
But what we do is basically we do that for a living, and increasingly, John, I think that is an industry trend, and we've got one of the most differentiated business models and kind of company setup to be able to take all of the best of Marvell and really go into these high volume applications and partner deeply with our customers. And there's really very few other companies in the world that are able to do that at our scale.
Indeed, yeah. A lot of analysts calling this a breakout quarter. The stock right now up about 17.5%. Matt Murphy, CEO of Marvell, thank you.
Yeah, great to see you guys.